so excited to have you on for another Let's Talk Money webinar series. Today, we have another great topic for you. And before I jump into anything, I'm just going to introduce myself real quick, and then Kathy and Seisha will introduce themselves as well. So my name is Kamaya Wallace-Bashard. I am a consumer economics educator with University of Illinois Extension. I serve Livingston, McLean, and Woodford counties. Kathy, over to you.
Good evening. This is Kathy Sweedler. I have the same title as Kamaya, but I get to work over on the eastern side of Illinois in Champaign, Ford, Iroquois, and Vermilion counties. And I'm very excited to hear this presentation tonight.
I'm Seisha Grobinstetter. No, you're fine. And I also have the title of Consumer Economics Educator, but I am in the collar counties of Cook. So Grundy, Kankakee, and Will is where you can find me. Back to Kamaya.
Yes, we make it easy for you. We just all have the same title, just serve in some different areas. So our goals for tonight, what we're trying to do with this topic. So our topic is fair access to credit. And I have to tell you, this is one of my favorite topics to teach. And I try to teach it every opportunity I get because information is constantly changing. And I just love finding more updated information. And I get to share some great examples with you tonight. So my goals for tonight are, of course, to explore discrimination in the credit market. It does exist, and lots of times I get lots of questions about, wait, really? I know that it probably exists, but what evidence do you have to show for that? So I'm going to have so much fun with reading some of the different reports that I have related to that for you. Then I'm going to be looking at just some of the warning signs, like what are some things that you can notice in yourself and what you notice happening to others, because lots of times, there's kind of like what we call the bystander effect. So it might not be you was facing any challenges or discrimination, but you might notice how somebody interacts with someone who is different from themselves. So just looking at what some of the warning signs are. Then we're going to review some protections from credit discrimination and what those actually look like, and provide some information for you on how to file claims relating to credit discrimination. So in the chat, like I said, we love participation. We love feedback. This is what makes our webinar work, in my opinion, because we get to interact with you on these calls, on these sessions. So for my first question to you is what are some big ticket items that credit allows us to purchase? So what are some things that would be hard for you to buy out of pocket? So I'm seeing college tuition, car, house, homes, appliances, swimming pool. Yes. What else? So more cars and appliances. Yes. So some of those big things, buying a farm, getting those acres that you need for what you're going to be doing there. I see land, real estate. Yes, those are some big ticket items that makes it hard for us to purchase without the use of credit. And we'll also talk that not everybody uses credit equally. And we have different attitudes and values when it comes down to money and when it comes down to credit. But for a lot of us, it is hard for a lot of us to actually purchase those bigger ticket items out of pocket. Okay, so whenever I start any kind of presentation, I like to go back to basics. I like to start with definitions, foundations, just for us to all be on the same page. I know a lot of you have a wealth of knowledge, of course, about the credit market and the credit system, but just to start out with the basics. So how does the credit system work? So companies report our information. So these are the servicers that report our information to our credit bureau. So say, for example, you decide to enter an agreement, a contract with a creditor, and that creditor may or may not sell your loan to a servicer. That's the people who actually manage the billing piece of your loan. And so once they get all your information, so they're looking to see, when are you paying your bills? Do you have any delinquency? So they have all that information. And so when they take that information, they can share that with the credit bureaus. And listed here are the three main federally regulated credit bureaus, so Equifax, Experian, and TransUnion. There are other agencies, of course, that deal with consumer information, but these are the three that we focus on a lot. So once those servicers share that information with the bureaus, the information that is in the bureaus can contain in like your credit records. So from the information in those credit bureaus comes like your credit report. So that has all those information, and each of these credit bureaus, of course, are their own separate companies. So they have a record of your payment, your history, and some other information about you in those reports. So from those reports come what a lot of us are familiar with, and we hear lots of things about, of course. So our credit scores. So they use the data from like the reports to create your credit scores. And there are different agencies that uses this information, and different agency that processes the information. So using different algorithm to get like your score based on the information that are in your reports. So with your credit scores, potential lenders. So, if you already have a house, you have a car, and you're looking to have some other line of credit, the creditors look at those information in your reports, look at your credit score, and they decide whether or not they want to lend to you. And so that is how that might have like kind of like that consumer effect. So just to give you kind of a basic overview of what the credit system is. So as I'm going along, my colleagues are checking the chat, and so am I. So if you have questions, please feel free to write those in there, and I will get to them. If we don't get to them during the presentation, I'll get to them at the end. So thank you, and feel free to share your questions. So my other piece I want to talk to you about. So we looked at the basics of the credit system. So what are borrowers' responsibility? So within the credit system, you as a person who is going into like this relationship with your creditor, with your lender, what is your responsibilities? So your responsibility, of course, is to do kind of like your due diligence. Like, what can I afford? And understanding a little bit more about like your money personality, how you handle finances. So get to know yourself a little bit, developing kind of like that healthy relationship with money. Our first webinar in this series, we focus on who am I with money. So that is a good one too, that you can go back to and see some resources that we shared about that. But just understanding who you are and what you can afford, knowing what your needs, your desires are. And of course, having like your information up to date. So if you have a new address, making sure that information is up to date, checking like your credit reports to make sure that all the information that's on you is up to date. Your responsibility as a borrower is also to maintain that contract, right? So you are going into an agreement with with like your lender, just to understand like the terms of the loans. And so making sure that you are aware of what that is. Paying your bills on time, of course, is another big responsibility. And then understanding what your cosigner responsibility is. So a cosigner is somebody who signs on a loan with you jointly, and they have equal responsibilities for that loan as well too. So understanding what that kind of is, and just making sure that you are doing like your due diligence in terms of keeping up with what you need to do to maintain that loan. All right, well, I have another chat question for you. So we talked about borrower responsibility. How about lenders? What are their responsibilities? Share your feedback in the chat with me. So we know that us as borrowers, we have to make sure that we figure out that information. Okay, so somebody says the lender protect their institution. Okay, accurate reporting, great. Up-to-date payments, not change the terms of a contract once signed. Okay. So provide loan terms. These are some good examples. So yes, lenders also have responsibilities. And this is touching a little bit on what we're going to be talking about as we talk about access to credit. And lenders are responsible for practicing fair and equal lending practices. So definitely having like clear policies and regulations, proper analysis of the consumer background. So just making sure that they're doing their due diligence as well too. So looking at the information that the borrower is providing and check in like that information to make sure that, okay, is this person taking out too much credit this year? Wait, I saw that they bought a car. Now they want a second car and they're doing some other stuff. Is this person going to be able to repay me and repay me on time? So just doing their due diligence and within, of course, the purview of the law, making sure that they're following that. They're also responsible to provide adequate customer service. So, updated contact information, making sure that they inform borrowers of like different changes and things that's going to be happening with them. So there has been a lot of changes since last year with different lenders and different lending agencies. And so keeping like information up to date with their customers, of course, is extremely important. So moving on from talking about like lenders and borrowers' responsibility leads me to like my big thing for tonight, talking about credit access. And this is a topic that, again, I absolutely love and I get lots of questions about, but sometimes I think it makes people a little uncomfortable. But in personal finance, we have lots of great topics. So topics that, of course, are those topics that bring us joy right away. And we love talking about them. And people have a great time because people have a lot of information and background on them. But this is one area that I know for a lot of consumers, there's still like misconceptions and different things about that. So part of my job and why I love this so much is to talk about that. So when we think about like access to credit, what does the research say? We know that lack of access to good, reasonable credit makes it very difficult for consumers to achieve home ownership, right? So we talk about like some of those big ticket items. That's one of the big ticket items, build assets, for themselves, for their future, for their kids, making sure that they're leaving like a little bit of a legacy behind for their kids. Of course, it makes it harder to pay for college, vocational training, things that are going to help you to advance in life, to earn more, to be able to support yourself and your loved one throughout your life. So it makes it harder for things like that. It makes it harder to have like reliable transportation to get to work and to other places that you need to be. So with like that lack of access to reasonable price credit, it makes it extremely difficult for some of the things that a lot of us sometimes may even take for granted because we have access to that. But for some people, it's a little bit more challenging. So when we think of like credit market discrimination, unlawful discrimination is the unfair, kind of unjust treatment of an individual or a group based on their membership in kind of a protected class. And we'll talk about like those protective piece again. So when we think about like discrimination, not everyone has that equal access. And we know from research, this is an older research article on here, but I have a lot more updated one as we go through that focuses on the fact that minorities and low-income families in particular have fewer chances of getting, loans that are going to help them with like different decisions that they're trying to make. So this is an important piece as we're thinking more about like what credit market discrimination actually is. All right. Any questions in the chat? Okay, well, thank you for your questions and thanks to my colleagues who are responding and sharing links. Seisha will be sharing a number of links to some of the resources that I'm talking about. So if you have an inclination to read a little bit more about any piece that I've mentioned, there are a number of links that are going to be shared in the chat, and Seisha just shared one as well. So moving on, I'm going to talk about three kind of distinct type of credit discrimination. So the first one is overt discrimination, where someone gets treated openly different based on a protected basis. So we'll talk about those protected categories in terms of age, gender, and all the other ones a little bit more. But it's kind of like that blatant, kind of in your face, no hiding kind of discrimination that people might experience. How prevalent is this? I don't know. I've lived in the Midwest for many, many years, and there's a lot of subtleties in different parts of the world. So it's hard to tell sometimes when people are treating you differently. So how often are people treated just differently, so openly, so kind of in your face, that's hard to tell. But this is one of the types of discrimination that does absolutely occur. The second one I want to look at is a disparate treatment. And of course, this refers to when an applicant is treated differently based on things like race and gender. And this again can be intentional or blatant, but it can also be subtle. So it may not be as obvious as the overt discrimination, but this is one that also occurs. The third and last one is the disparate impact. And this is when a lender applies a neutral policy to all applicants, but that policy kind of disproportionately affect people of a particular group. And I'm going to share a few examples later with this that focus on age discrimination that falls right under how a policy may kind of inadvertently target a particular group of people. So it's going to focus on like folks in a certain age group and how that policy kind of discriminated against them. So these are the three main types that you will see in lots of law books and lots of different civil rights and social justice definition relating to like credit discrimination. And Stacia just shared a link in the chat as well too for that if you want to read a little bit more about those. Okay, I'm checking the chat for more questions. All right, moving on. I keep hinting about sharing just like different information relating to research and actually telling people that this does happen, and consumer protection agencies are doing a lot of different work to highlight the fact that people are facing like different challenges when it comes to credit discrimination. So I have a few snapshots for you. And these examples just illustrates like perceptions and experiences or perception of experiences that people have had. And I want to emphasize that too, because with like some of this national data, they're asking people, do you feel like you have experiences this before? So it's like a lot of different survey-based questions. So just understanding that's kind of where that's coming from. So one of the research that the National Fair Housing Alliance and Zillow did was that they surveyed 10,000 adults in the United States, so in a metropolitan areas in the US, and they found that 25% of respondents believe that they experience housing discrimination over their lives. And that, of course, just like over the life course, not at one particular time, but just over the life course. And again, just different perception of how people feel that lenders have treated them, how they've interacted with them. So consumer protection agencies have been and continue to be very interested in the disparities. So sometimes the large differences they see among different groups, and that could also be racial groups. So one of the studies from the Consumer Financial Protection Bureau also examined credit scores of about 200,000 consumers. And they found that areas, so where people live with the highest concentration of people of color, had like lower average credit scores. So they found that in these areas, wait for it, they found that in these areas that people were experiencing a lot of issues when it came to subprime lending, and of course like higher disparities when they looked at foreclosures. So they were looking to see how lending practices affected the decisions that people make in terms of borrowing, and how that of course affect that consumer impact that I talk about in the beginning when I was going over the basics of the credit system. So what does that mean for the consumer? It means that because of those lending practices, a lot of people end up having lower credit scores, and with lower credit scores, it makes it harder for them to have additional things that they can borrow. So it makes it harder for them to borrow more and engage in like the credit market as freely as some of us might be able to. So just want to share that example. Again, I have more for you because I get this question a lot. You like this topic so much, Kamaya. What evidence do you have? Okay, so I have another one for you. So again, this study from the National Fair Housing Alliance did an analysis of 8 different franchise car dealers. And in this study, so they were doing a bunch of tests. So they were doing some tests to just look at some in-depth analysis of how these different testers, so white, non-white testers, were treated. So the tests were designed so that non-white testers had better financial profiles. So non-white testers had a better financial profile. So like their credit scores look better, like a lot of things about their credit history look better. But they found that when they were doing all these tests, they found that even though the non-white testers were kind of set up in the test to have those better profile, that they were still given like higher pricing options. And white testers were more likely to be taken as serious buyers and presumed to be more qualified. So they got a lot more feedback from the people that they were testing with, just to show you the differences in how like these different dealership interacted with folks. So part of the test was set up definitely to see, what are some of the differences in how people are treated. And of course, these were with adults that the tests were done. So I wanted to highlight those few examples just to give you some background, some evidence as to what credit discrimination actually look like and how does consumer protection agencies, how do they work to help us as consumer understand what's going on? All right, any questions? Thank you. I see some activities going on in the chat. Thank you, colleagues, for answering questions. So now that we've looked at those snapshots of what it actually looks like in the US, all of these examples were US based. What does it mean to experience like credit discrimination? Like what should we do? And how do we know if we're being discriminated against? When I think about like or credit experience and the things that we do that brings us joy. So say, for example, you've wanted a new car for a few months and you're finally making the decision, you've saved up some money, you're making the decision to go in. You go in with like that great optimism. You're so happy, you're so excited to explore, to see, I've wanted this Ford Escape for so long, this newer version, and I'm going in and I'm going to do some test driving and see what I'm going to be getting for rates and stuff like that. And you have that optimism. So I am assuming that most of us, when we are taking out like different lines of credit for things that matter to us, we go in with that optimism. And sometimes some of us are not treated as fairly as we would like. So that's where the warning signs come in. So we're optimistic, but you go in or you're dealing with like someone and you might sense certain things. It doesn't always happen, but it does happen. So what are some of the warning signs that you can look at for yourself, or if you are an ally and advocate for other people, to notice how like a lender or others might be interacting with others? So you're treated differently in person than on the phone. And that can be very, very interesting as well too. So, credit discrimination happen in multiple ways. So again, with like different factors. So whether it's gender, age, race, national origin, different ways in how people interact with us. So whether or not you have an accent and you might sound differently on the phone, or how when you filled out all the documents. So you filled out all the documents, they haven't heard you speak, you go in, they hear you speak or they see you, and that might be different. So like having like some differential treatment, that is obvious to you. So when people are in certain situations, they can sense when something is happening. So being treated differently. Of course, being discouraged to apply. No, you don't want that. Think about like the money, what that's going to cost. So different things like that, things that might be kind of off to you. And for a lot of us, we sense that, we are intuitive people. We can sense when things are happening. The other piece, of course, is like when negative comments on like race or gender from the lender. And again, you and the lender might have like the same racial background, and they might make a comment about another racial background that you hear and might pay attention to that. So it could be something like that where they're not saying it directly. So it's not overt in that person's face, but you are hearing them. And you're hearing that. So just understanding that you can hear like just some of the different things and acknowledge some of those warning signs as well. Denied credit with no reason given. What? Okay, we're going to be talking about that in a little bit when we're going to be talking about, if you're denied credit, what you should do. So that is another warning sign. So not having like a good explanation of what that actually is. Sometimes it sounds too good to be true, right? So we teach a lot on financial exploitation. We teach on fraud. So a lot of different things that we teach on. So if it sounds too good to be true, let's think about that. Let's email Kathy, Kamaya, or Seisha just to find us some more information to see if, what am I facing here? What's going on here? Another one, of course, is being pressured to sign. So having like this very strict timeline, you only have till 9 o'clock tonight to sign this document or you won't get the deal. So just like different things when it comes to being pressured to sign and having like these very tight timeline where it doesn't give you time as a consumer to actually sit and think about that decision that you're making. So these are just a few of the warning signs that definitely important to think about. All right, I have a chat question for you, which give me a minute to breathe here. I like this question. So for me, when I think about, what are some of the information about you that a creditor can lawfully examine? So you are taking out credit with them. What information about you can they look at or they should look at to make sure that they're lending to somebody who they believe will be able to pay them back? So in the chat, employment, income, see your credit score. I see debt and income, so debt to income ratio, bills not paid, debts, degree, credit, income. All right, so great. Thank you for sharing like those responses. Yes, so for creditors, they can look at a lot of different information and that helps them decide, how can I lend to this person? Will this person be able to pay me back? And of course, like, what are they in it for? Like for, of course, the help with their institution, build their business and a number of things related to that. So good response in the chat. Thank you for sharing that. So I'm going to be talking a little bit about credit invisibility. Like I said, I have a lot to share with you tonight. There is so much when it comes to understanding a little bit about the credit market, credit discrimination. And so when we think about like credit discrimination, it is hard not to talk about credit invisibility. So I want to quickly share with you a report from the Consumer Financial Protection Bureau. So they did a report back in 2015, and they found that there were approximately 26 million Americans who didn't have any credit history with one of the national credit reporting agencies. So those were the big ones that I talked about with Equifax, Experian, TransUnion. So not having enough credit information for them to look to see and to help decide like that credit worthiness fee. So they were focusing on why are so many people credit invisible and what does that actually mean for consumers? Now, when we think of credit invisibility and we think about like discrimination, it may happen through that, but that's not the only reason why credit invisibility exists. But in this report, they wanted to highlight this fact and wanted to look more into detail about it. So they found that an additional 19 million people had unscorable credit files. And what that means is their credit files were too thin. There's not enough information in there on their credit history for them to assign them a score. So they look at all that information just to try to find out a little bit more. about that. So what this report kind of indicate is that there are people who are credit invisible for a number of reasons. So since lenders use our credit history to decide that credit worthiness, people who fall into this category of credit invisible may face a wide range of challenges, and challenges such as, problems leasing an apartment, lots of different things that credit invisibility may cause. So why are people credit invisible? Let's think some more about that. Well, there are a number of factors. We talk, so on the right hand side of the screen, we talked about these already. So the different types of discrimination that people may encounter. And so we looked at the overt, disparate treatment, and impact for like the different types of discrimination relating to, being blatantly treated negatively, policies that might be applied that is unintentional and might hurt one group over the other. So unequal access, of course, is a big one when it comes to credit invisibility. But there's also some other stuff within us. Lots of times, some of us grow up or have different relationships with people, and we develop what we think of as negative view of debt. So this is information from the Pew Charitable Trust. So why are people more credit averse? So people who may not want to use credit and choose to be credit invisible to some degree. So it might be negative view of debt. They might see loved ones or friends use credit in such a way where they end up in a lot of debt, and they're like, that's not going to be me. No, that's not going to be me. So I'm not going to do that. So seeing it kind of like that way. Then other ways, of course, is again, people might be using debt irresponsibly. So they're thinking that people don't have really good knowledge about credit management. So they might use credit irresponsibly, and they don't want to fall in those kind of traps. So they see it as like these traps that they could fall in. Another piece is that sometimes people do believe that people use credit to live beyond their means. And so if they have kind of those thought process and they believe that is the case, they might choose not to be using credit. But we know for a lot of people, just like the question in the beginning, we use credit because there's some things that we cannot just pay out of pocket, and we definitely need to use credit to be able to achieve that. So some might believe that is to live beyond means, and they might see examples of that, but for a lot of people, using credit is just to afford those big ticket items. Any questions as we're going through? Thank you for all the chat discussants. So now that we've looked at credit invisibility and some of the reasons, some of the contributions to being credit invisible, how can you become more visible? So for some of the research that we've looked at, that I've looked at for becoming more credit invisible from the Consumer Financial Protection Bureau, they found that with built-in credit, like credit cards are kind of like one of the most popular products to help people transition from credit invisibility. So for people who are looking for kind of like that out, it's like, okay, I make some decisions not to use a lot of credit, but I want to change that a little bit because I have other things that I want to try to accomplish, and credit's going to help me with that. So they found that for a lot of consumers, opening like a credit card account, was like one of the big ways that they tried to use to build like their credit. There are also efforts from different agencies to help use alternative data to build credit. So whether it's like rent, so things that you wouldn't traditionally find in like your credit history or credit report. So there's been lots of different efforts from like different agencies to kind of use these alternative data as a source of information to say, okay, I may not have like a vast credit history. I might be from a family who's new to the country and you're trying to build from the ground up. And, but I've been paying my rent, my phone bill. I've been paying my utility bills every month on time, using this information as a way to track just those diligent behaviors. Because even though someone may not have like a big credit file, there are other things that they're doing to help them with like building like that credit visibility. All right, any questions? Guys, I'm running through this. Okay. All right, so I've been talking or hinting towards like protected categories, and we're going right into that territory right now. So what we know, and this information is from the Federal Trade Commission, what we know about like credit and consumer rights is that good credit rating is important, right? I think a lot of us can agree to that, that it is important. And lenders have the right to inspect, they have the right to evaluate our credit report or credit history to decide how they're going to lend to us and if they're going to lend to us. And you as a consumer, you definitely have rights to check like your free credit report at annualcreditreport.com. And so making sure that you know like what your rights are as a consumer in terms of like managing credit, applying for credit, using credit, all of that is so very important. And which is why I always have such a good time with this webinar. So some of our consumer protection law, and I'm going to go over a few of these. Again, lots of information to provide to you, but it's good information, I promise. So consumer protection law. So the Equal Opportunity Act makes it illegal for creditors to discriminate in any aspect of a credit transaction based on the protected categories that I'm going to go through. But before I go there, fair lending practices, just to quickly highlight that as we're talking about protection laws, fair lending practices support that equal access, and financial institutions, of course, are reminded that they need to establish effective policies and procedures that shows transparency and non-discrimination in all aspects of like their credit transactions. So making sure that they understand like what these protections are, and they of course support like consumers. So here are the protective categories. I keep saying them and I keep hinting towards them and giving you some examples, but here are the main ones that we talk about. So when we talk about protected categories under the law, information that your lenders, creditors cannot use to deny you credit, to treat you differently, include your national origin, race, employment, religion, housing, gender, disability, age, and education. So these are some of the main ones that we focus on when we talk about like these protected categories. And it's important to know that a lot of these, even though lenders may ask questions related to like personal characteristics, of course, some of what we talked about, right? So your age, marital status, they may not use that information though to decide to give you credit. So they have to look closely at some information, but they cannot use these as a way to deny you credit. All right, so I have a poll question for you. As we're thinking about all that we've talked about in terms of discrimination and looking a little bit closely at that, I have a quick poll for you. Thank you, Kathy, for launching this poll. Do you believe you have experienced credit discrimination based on any of these categories? So the answers are yes, no, maybe. We'll see what that says. All right, it looks like most people said no. We have some maybe, so 31% maybe, and then 19% yes. Thank you for sharing that. This is a little different than the last time when we did this. So this is good information to know. So lots of times we are in situations that we understand. So if you've heard terms like microaggressions, those subtle behaviors of things that we might experience that other people sometimes may not see. So you might see things and you're like, I don't know about that. So just in a personal example, my partner and I have been together for 11 years now. Wow. So 11 years now. And he's more of a tall, domineering presence. And, we're different race. So lots of times when we are in certain situations, I might pick up and notice certain things where there's eye contact to him. There is just how they're interacting with him. And he might defer to me and be like, so my wife has to say this or something like that. So in those situations, even though it's kind of like, why aren't you talking to me equally as you're talking to him? It doesn't necessarily mean that we're experiencing like discrimination. We have like a similar credit profile. So when they look at our information together, we don't experience that. But in certain situations, you might observe those subtle differences that somebody else might not. So, even just trying to understand a little bit about like credit discrimination and different types of discrimination, somebody say, oh yeah, it happens. It really does. So you notice like these different things, but it doesn't necessarily mean that you are experiencing credit discrimination. So based on the definition and some of what I've already shared, knowing what some of the actual warning signs are becomes very important. So just wanted to share that. Thank you, Kathy, for the poll. All right, moving on. Like I said, I was going to be talking about a little bit more of the protections, and I'm watching the time as well because I value your time and definitely want to stay on track. So, other protection. What are some other things that you as a consumer need to know? Wonderful news. There's a lot in terms of housing, and I'm very, very glad that there's so much in terms of housing because, for a lot of people, buying a house is one of the single most expensive things we'll do in our lives. I know for me right now, that's it. Like the single most expensive things I would do in my life. So glad that there's lots of different protection relating to housing. So, the Fair Housing Act make it illegal to kind of just close your account, refuse you for credit if you qualify for it. And of course, with that first piece, just understanding, what should be fair. What should be fair to you as that consumer? So just to highlight a couple more of those. The other one I want to talk about, which kind of relates to like Illinois folks, Illinois residents, like with credit discrimination in real estate, just making it illegal to discriminate on certain characteristics and just making sure that for people when they're going into looking at like different opportunities in terms of different neighborhoods they want to live in, different housing types that they want to explore, just making sure that they have equal access to that and they have fair access to that. And by that, their information will be looked at just as everybody else is. So just understanding that a little bit. Some other prohibited activities, relates to, like just disclosure of different property listings. So people not sharing, like lenders not sharing like the full property listing to some folks as they would to others, just making sure that that is open and accessible to others are very important, and those are prohibited under the law. All right, jumping ahead, I have another question for you. So we've talked about credit discrimination. We've kind of reflected on some of the issues relating to, how do you identify it? What does it look like in the United States? And, how does it affect consumers? And what are the responsibilities of you who's borrowing that credit? And what are the responsibilities of the lender? So with this question, I wanted to switch gear just a little bit. As we're talking about credit discrimination, it's also important to know, why would people be denied credit? Why would people be denied credit? Is it because of discrimination or other things? So this is also an important one to think about. So what are some common issues that consumers run into when they're trying to, open credit or establish credit? What are some things you think they might run into? Share that with me in the chat. Oh, no credit history at all. I just love the fast feedback in the chat. Okay. Lack of credit history. Getting started. It's hard to get started. So no social security number. Looking at, let's say, that lack of income. Debt to income ratio. Okay. All right. Thank you for sharing that. So why might people have these experiences? So here are some common issues when it comes to like credit. So establishing credit or opening new credit. So some of the common things, of course, and a lot of you said this, that not enough credit history, or people might experience issues like being denied like a credit application, or may experience fraud or identity theft. So with like a lack of credit history, what can you do? What can you do as a consumer who's maybe trying to rebuild? Because lots of things happen in our life sometimes. So some of us are able to maintain like that good credit history and have like that report, but sometimes life situation just happens, and you might end up in a situation like that you didn't think you would be in, and you're trying to reestablish yourself and trying to kind of like build that back up. So with the lack of credit history, important things, of course, is to make payments on time. So those on-time payments, that's a huge part. So that's like 35% when we look on our pie chart for what makes up our credit report. Like that payment history is like the biggest number. So making payments on time, and being patient. I've talked to people who really just really want to get going. I really want to accomplish this. I feel like I don't want to disappoint my kids. I want to get this going. And, I ended up in this situation that I didn't think I would be in. And I just really want to make sure that I rebuild this credit. So just being patient with yourself, that is such an important piece. So if you're denied like credit application, look to see what the errors were. And if you can dispute those errors, if it comes to things like, fraud or identity theft, like somebody stole your information, messed up your credit history, just making sure that you follow up on that and you're monitoring like your credit report just to make sure that the information in there is accurate and it doesn't show any fraudulent activities. So those are some of the common issues and different things to think about. So I talked about this, if you're denied credit, what does that mean? And how do you address that? So if you are denied credit without no explanation, well, we got to investigate that a little bit, because we need to know why. We need to know why that occurred. So there is what you call adverse action letter. So this is a notice that informs you that you've been denied credit or employment or insurance or anything of the sort based on the information in your credit report. So it should report which of the credit bureaus, so which of the agencies actually gave this information and how to contact them. So if it was Equifax, TransUnion, Experience, those major ones, like your letter should show why that is the case. So it should indicate that, why you were denied. And to deal with that kind of like denied credit, and sometimes it's hard to pursue action because you wanted something, you were excited about it, then they're like, no, and you feel disappointed, and it's just like, sure, whatever, I'll move on, I'll go on with my life. But it is important to try to follow up if you can. So, dealing with that, definitely finding out why, and then looking at like that letter that you should get in the mail. Then, of course, you're going to review your credit reports. So again, your credit report is available to you. So by federal law, it's available to you to review to see what errors, what inaccuracies might be on there, just to check that information. And then, of course, third, working to improve like your credit worthiness. Again, with those on-time payments and making sure that you are making those decisions that's going to help you with like maintaining, building your credit in the future. So just some ways to deal with that. All right, I see some active in the chat, but I'm moving on. So, what's going on today? I wanted to also talk about, just like in today's society through this pandemic, there's been so much, and I'm going to use the word, don't hurt me, I'm going to use the word uncertainties. There have been so many uncertainties when it comes to like credit and understanding what's happening with all the changes from last year and some of the different things for this year. So new Consumer Financial Protection Bureau report, showed that, in this report, they looked at information on credit access, delinquency rates, payment assistance, etc. And so they found that through June 2020, consumers did not experience many negative consequences that might be expected during periods of high unemployment or large income shocks. So when I think about credit discrimination, then credit access, like what are people going through? And so this is just one of the reports that I just wanted to quickly touch on, that is kind of relevant to today. I know, again, lots of different challenges that people are facing and questions when it comes on to credit. All right, so wanted to share that information and then move on. I'm almost to the end. Look at me. I think I'm doing great with time in here. So almost to the end, but I also wanted to share this example because when we talk about like the disparate treatment, disparate impact, and how policies can, affect some groups, I wanted to share this Consumer Reports example real quick. So again, keep in mind that credit discrimination can happen in many, many ways. So in this Consumer Report article, they looked at how middle-aged drivers were overwhelmingly given increased premium over other drivers. So the insurance company, so they were working with like the insurance company just to find out more information on how they're doing this, how they're working to understand, increase or decrease like their premium. So the insurer decided to run a policy through what they call like an advanced algorithm. I don't know what that means. It just means like it run through a computer program, right? But it said advanced algorithm containing like a dozen variables. So the Consumer Report Agency, they analyze this information, they analyze all the data and the documents, and it showed that consumers who were already paying the highest premiums saw like the highest hikes. So they ended up paying a lot more money than people who were already paying a low amount. So part of this report was just showing that like these leading car insurers were looking for ways to like increase premiums to better their business, of course, and to see like what ways they can serve their customers. But they ended up using a system that kind of disadvantaged like middle-aged drivers. So this was just another example of kind of like how policy might be applied, like a neutral policy, but it ends up not working for everybody. And so some folks might experience that discrimination. All right, we're coming to the end. So thank you all. Be patient with me. I have a couple more minutes. As we're thinking about like credit discrimination and we look at who we are as individual, there's several resources that I find quite valuable. I've done like these different tests just to see kind of where I'm at. And the implicit bias test is one of them that I really, really like because it makes me think about how I treat others who are different than me. And it makes me think about how lenders might interact with other people and also noticing what's going on around me. So I may not be the person who is directly affected, but just kind of knowing a little bit about what's going on around me. So we have like options for going online to find some information on implicit bias, looking at things when it comes to like inclusion. So Seisha's going to share those resources for you that you can use as you're thinking about, what does this, what role do I play and how do I try to understand this a little bit more? So part of this whole webinar too is to just kind of build on that a little, what do I know? And how does this affect me as a consumer? How does this affect my neighbors as a consumer? So these resources can be very, very helpful for you. So I hope you explore them. I also said that I wanted to share some resources on how to file a complaint. So you can file, if you've experienced this discrimination, credit discrimination, you can file with like the Consumer Financial Protection Bureau, the Federal Trade Commission. These are some resources that you can explore as well. And what happens when you file? So when you file any information about like discrimination that you've experienced, what it means is that it helps you as a consumer to build a relationship with others who might be going through some of the same things. And it helps you connect with the financial companies. Because when we're thinking of like the different financial companies, if you've experienced discrimination at one level, and then the higher ups might not fully know what's happening throughout their company. So when you file a complaint, when you highlight any treatment that you've gone through, it allows them to take responsibility. And we've seen some of that over the years, to take responsibility and make assessments about how they deal with consumers and consumer complaints. So it gives you a chance to help one another, give us a chance to help one another. And when you do that process, it gives you kind of like the step-by-step instructions that you can find online to go through that. All right, I have a last poll for you. Thank you for hanging on with us. It looks like I have a minute with you. So I have one more poll for you. Again, these answers are anonymous. These do help us with like our funding options. They also help us with like our outreach options. So just a few questions on here. Which gender do you identify with? Are you Hispanic? What race do you identify with? If you could answer those for us, that'd be great. And also, as you're hopping off, or we just want to know how we're doing. So this is our second time offering our Let's Talk Money webinar series. And we have so much fun with it. And we love the topics that we cover. And we would love your feedback on how we're doing. So if you could give us some information on that, that'd be great. Stacia will share the link in the chat for you to complete a brief survey for us. That will definitely help us.